Hi, I'm Luisana Suegart.
And I'm Armando Gutierrez Jr. Thanks for joining us for this Markets.com investor profile on Jim Cramer.
In life, most people are sure to have noticed that character and personality matter more than results.
But wait, that can't be right. Although it seems to be when it comes to giving stock tips on TV. The poster boy for this idea is Jim Cramer, host of CNBC's Mad Money.
Cramer is a former hedge fund manager who outperformed the markets while running his hedge fund, making money for both his clients and himself. He also co-founded TheStreet.com in 1996.
So when he left his hedge fund in 2000, he had enough money to never work again. It seems, however, that Cramer wanted to help his regular investors after advising day traders for years through TheStreet.com.
And after a few years of pitching an idea for a TV show to investors, he finally was able to land the show on CNBC. But in retrospect, let's hope that he is in need of some extra cash and/or attention because he has been horrible for the viewers and investors who follow his advice.
Many have recently attacked him for his horrible calls on Bear Stearns, for which he said on March 11th.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Don't move your money from Bear. That's just being silly.
On that same day, Bear Stearns was trading at about $63 per share. Just 5 days later, JP Morgan bought Bear Stearns for $2 a share.
Others will attack him for his very biased and very wrong endorsement of Wachovia, whose newly introduced CEO, Bob Steele, was Cramer's friend and boss at Goldman Sachs.
If we had a plan, Wachovia might have been able to split into a good bank and a bad bank and be saved. Wachovia was overtaken by events. Still, I have no choice. I got to put my friend Bob Steele on the wall of shame. You know what? I should put myself in the annex. I didn't protect you good. I didn't protect you better. I screwed up. I apologize.
And some have attacked him for his October 6th interview with Ann Curry on The Today Show.
So for investors, what is your advice today?
Okay, whatever money you may need for the next 5 years, please take it out of the stock market right now, this week. I do not believe that you should risk those assets in the stock market.
Even if you would take a tremendous loss and selling your stocks at this decline, you say take it out?
I don't care. I do not care where stocks have been. I do not care where stocks have been. I care where they're going.
Now, to all those people who attacked the guy, we could say that, yes, he probably gave some bad advice at the worst moments, and that it's not so bad considering his solid track record. But wait, he doesn't. Cramer's record has been checked by many and found to be no good. It was only on August 20th of last year that Barron's published Shorting Cramer, an article by Bill Ebert proving that Cramer was underperforming the market and that CNBC was either padding his stats or calculating the returns in his picks incorrectly. In return, Barron was attacked by CNBC and most of its contributors were banned from the network.
On November 8th of last year, TheStreet.com published Cramer's very own Cramer's 10 Reasons to be Bullish, in which he outlined his 10 reasons explaining why the stock market would rally to his Dow target, 14,548 points. But wait, that same number was his target for the Dow in January of 2007, for which in May, he gave 5 reasons why the Dow would reach that target.
On October 31st, 2007, Cramer said that the stock market would keep going higher, adding that people shouldn't be overthinking the situation because overthinking the situation results in people losing money, and that stocks were overvalued but would keep going up. There he was on TV, a respected stock picker, preaching the greater fool approach.
You know, you watch people come on TV and they're like, oh, it's so scary because of mortgages or gold skyrocketing or weak dollar or that oil's out of control. I mean, it just sounds like everything's just so bad out there, right? You should be buying things and accept that they're overvalued, but accept that they're going to keep going higher. I know that sounds irresponsible, but that's how you make the money. So what should you do now? Stop trying to outthink it. Stop trying to be smarter than the market. Forget what you used to know. It's not working right now. So go buy some Transocean. Go buy some Deere. Go buy some Baidu. Just go do it. It's okay. Go buy some Google. Buy a little.
On January 22nd of this year, Rick Santelli slammed him for calling a bull market for the last few months, for which Cramer responded,
Have you watched my show? You ought to watch my show. I've been calling a bear market.
Of course, we have to add the caveat that these were only allegations and that the SEC found no wrongdoing even though they started multiple investigations against him. Yet we know what he thinks about the SEC.
So let's say I were short. What I would do is I would hit a lot of guys with rim. Now you can't ferment. That's a violation of
ferment.
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal.
We think that's more than enough reasons not to trust Cramer, but in case you're not convinced, we'll add the fact that he thinks that us regular Americans are idiots.
The American public doesn't know jack, doesn't know jack, doesn't know jack.
You would think that he would never utter those words, but what more can you expect from a guy that says that the academic-minded people at the Federal Reserve know nothing?
Bernanke is being an academic. It is no time to be an academic. It is time to get on the Bear Stearns call, listen, open the darn Fed window. He has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. He's nuts. They're nuts. They know nothing. They know nothing. They know nothing.
This is the guy who said that he would love to, quote, go in and destroy the moron longs who most of the time are retail investors. This is also the same guy who said he loved to help regular investors, but in 2001 moved all his columns on thestreet.com to paid subscribers. Yeah, thanks for the help, Cramer.
So, to wrap this up, it's not that we dislike Cramer.
In fact, watching Mad Money is an enthralling experience that never fails to keep you wondering what this clown will do next.
He serves a dual purpose on the show. He entertains and gives stock advice.
So while he is quite entertaining, bringing many new people to the world of investing and his Cramer America, the fact remains that he is not someone that retail investors should be listening to if they want to make money in these markets.
So we'll leave you with our very own 10 reasons why you shouldn't listen to Cramer.
He is no oracle at picking stocks.
He is Benjamin Graham's Mr. Market.
The way he made money at his hedge fund won't make you money.
He lies about his record.
He flip-flops.
He thinks you're dumb.
He encourages and condones illegal activity.
The other contributors at CNBC definitely don't listen to him.
He cares more about money and attention than you.
And his list of 10 stocks for the New World Order tanked. That's it from us. I'm Luisana Suegart.
And I'm Armando Gutierrez Jr., and thank you for watching this Jim Cramer profile, and watch out for Cramer.